From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 5th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the US currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels we'll be looking for entry and exit opportunities. This week, we have a few currencies that have interest rate news, and you'll want to be sure to check your financial calendars for the latest releases as we go throughout the week. Let's get started here on the USD CHF, the dollar franc. Of course, on the right-hand side of the chart, we can see this currency pair has been in an uptrend for several weeks now, really going all the way back to the election results. We see the spike lower all the way down to the bottom of the blue trend line, and ever since then, it's been moving higher for the most part over the past several weeks. However, it's come to a pretty much of a slowdown up here at the top right-hand side. You can see that black box up there between the green and the orange shaded area. We've been kind of stuck inside of there over the past couple of weeks. Until last Friday, we broke underneath that green shaded area at the bottom of that black box. The question, of course, is this going to be some sort of reversal? Are we going to see this continue to pressure down? Or are we going to see just that be a false push lower and then we're going to see a resumption of the uptrend? I don't think we can surely answer that question until we look for further evidence of reversal or continuation here for this currency pair. Let's go back in time just a little bit. Over here on the left-hand side, you can see the black circles. We can see historical price action around the green and the orange shaded area as well. So we know that these levels are clear decision zones in the market. Take it down to the 4-hour time frame. Again, we see last week pretty volatile. In fact, I think we could just take this black box that I have here on the chart and bring it out here like this. I think that's beginning to give us a better picture of what's been happening over the past couple of weeks, where we see, in fact, let me put that over a little bit further. We can see that going all the way back here to November 18. So since November 18, we've been above the yellow shaded area, kind of a hinge point in the green zone and resistance at the orange zone. So in the direction of the trend, let's go with that first. If we're going to trade the direction of the trend, we would typically be looking to buy support. Well, at this point, I would say that the yellow shaded area is our support between 1.0080 and 1.0055, and that's been that way again since the 18th. So if we're looking for a buy scenario with low risk and high reward, that's the yellow zone, 1.0080 today. And the risk, of course, is that it breaks underneath 0055 and goes lower. So take a look at that yellow zone. Let's zoom it in on there again. Take a look at that yellow zone. We've seen support since the 18th. This becomes an opportunity for us today into 1.0080 to go long. Risk or stop loss would go just underneath the yellow zone, because right now you just don't want it to get back underneath there. Now, if you're looking to go short, if that's the direction you want to trade this currency pair, then I think you must, it's an imperative to wait for it to break through that yellow shaded area before you would decide to go short and look for further reversal for the dollar franc. Take it on over here to the euro dollar. Similar situation, but just the opposite. We have been in a downtrend for the most part for the past couple of weeks. But here's something interesting. This is the weekly time frame. Keep in mind, this is a weekly time frame. Middle of the chart, 2014, clear downtrend. Since January 2015, almost 2 years now, we've been inside that little red box at the bottom of the chart. This box down here. I say little, but it's not quite little. But take a look at the black boxes at the bottom. That's an important part. Zoom it in one time. Support, reversal. Support, reversal. Here we are again into the support. Let's go ahead and take it down to the daily time frame. There it is. There's your third black box on the right hand side. We can see it's touched down into there over the past couple of weeks. We see some indication of buying pressure here. So the question, of course, of the day, or really the week, will be, are we going to look for reversal here, or is it finally going to turn around and go back down in the direction of what has been the trend? We have some ECB news later on this week, so we'll want to pay attention to that. But right now, we see the buyers trying to take control. If you're looking to go long and buy this currency pair, let's take it down to the 4-hour. If you're looking to go long and buy this currency pair, I think you want to be sure of the breakout and reversal. You want it to stay above this purple zone, 1.0650, and continue that upside pressure. We may look to adjust these shaded areas just to incorporate, encapsulate some of these resistance and support levels later on today in the live trade room, so you want to be sure to join us for that. But right now, we want to be sure of this reversal. I'm not sure of it. It could be a false breakout, so we want to be sure of that before we take a trade here on the euro dollar. Take it over here to the GBP. Of course, it has been moving higher. I want to point this out. This is the daily time frame. Look at the two circles. There's a red circle, a black circle. I've taken Fibonacci from the high all the way up here at the red circle to the low at the blue circle. What's interesting about that, and I know it's difficult to see this, if I zoom it in maybe a little bit, we can begin to get a better idea. There it is, that's a better idea. Look at where the 50% retracement level is, 1.2763, as well as the 100 period simple moving average just above the market. So we want to watch out for some resistance here between the 50% retracement level of the previous downtrend. Let me see if I can zoom it out again and show you where that comes from. There it is right there. It's all the way on the left-hand side of the chart. Top of red circle down to the blue circle, Fibonacci, we are at the 50% and the 100 period simple moving average. So potential reversible zone, of course. Potential breakout and continuation higher. I think if you're going to buy it, you don't want to buy it at the top. Okay, let's zoom it down to the 4-hour time frame. Obviously, we're at the high. We're at the multi-month high here, multi-week high at least, or multi-month high. Let's just take and put an arrow here. You don't want to buy it right now. You would need it to break through that high if you're going to buy it. If you're looking to buy it, it always makes sense to me to buy into support, which at this point is all the way back down at 126.50. So either waiting for it to drift or dip down to the pink zone to buy it, or break above the blue zone to buy it. Otherwise, watching for evidence of resistance and reversal from the blue shaded area is a possibility this week for the GBP USD. Take it over to the USDCAD dollar CAD. We can see that this currency pair, for the most part, has been in an uptrend for the past several months. We're going all the way back to April and May of this year. It's been in an uptrend along the blue trend line. It's been kind of a sloped or angled uptrend, not quite like the red trend line, and a significant fall, but just kind of been a light slope to that angle on the trend. I still think that that's the direction to focus our efforts in, even though over the past couple of weeks, or at least a couple of days, we've seen a free fall. And of course, that's likely due to a lot to do with the rise of oil prices that we've seen over the past several days. But anyway, this continues to pressure lower. Some interesting things here. We saw in the middle of that trend right here with this red trend line a pretty significant fall. Then it found support and went back up. So when you're looking to the right hand side and you say, hey, there's a pretty significant fall right now, wouldn't it be interesting if it found support around the blue trend line again, like it did back here? Something else interesting about that blue trend line is that's where the 100 period simple moving average lives, right down here into the just into the upper 131s, 131.85 or so. So interesting watching the blue trend line, the 100 period moving average, as it falls down into there. If it finds support, we could be looking for this to turn around and go back up. The last couple of times it hit the blue trend line, it turned around and went back up. Significant positive U.S. data, negative Canada, or a fall of oil prices again could cause this to turn back higher. Once again, we are at significant support. Look at the yellow shaded area here in the middle of the chart. I have blue circle right here on the left, blue circle, red circle, all showing that yellow shaded area as a significant decision point. Don't sell it right now. That's really the best thing I could tell you. 1.3290, 1.3260 is support. You don't want to sell at support. It has to break the support underneath 3260 before you would expect it to go lower, or at least rally back to resistance, which is the orange zone, 1.3340, before you'd look to go short. So again, don't sell on top of the yellow zone. You can clearly see that's support now, so don't sell it there. 4-hour time frame as it approaches the yellow zone. Again, I don't think it's a good opportunity to go short on top of the yellow zone. Maybe an opportunity though for today to find some support there and take a turn back higher towards the yellow zone. Again, keep an eye on those oil prices. If they significantly fall, we could be looking for this to go back up, break the orange zone and go back up. If they continue to rise, maybe another push or surge down towards the yellow zone on the US CAD. Take it over here to the US yen. It's been in an uptrend. It's still in an uptrend. I don't think anybody's going to change their mind about that anytime soon. So we want to focus our efforts in that direction. Take it down to the 4-hour time frame. We can see what's been happening. Let me zoom in one time here. We can see what's been happening. As expected, it came back down to the orange zone, found support. Now we're back above the yellow zone. Last Friday, we were talking about the congestion here. A dip to the orange zone became an opportunity for support. So if you decided to get in at the orange zone, 113.20, 113, then you're in profit. You should be protecting profit. I didn't do it because I wasn't trading at the time, so I didn't get into it. But next thing we're looking for now is for it to sit down on top of that yellow shaded area as support and head on back up to the pink zone. The next opportunity for a breakout would be above the pink shaded area. Now, if you're looking to go short, I think you need further evidence of reversal. This currency pair is in an uptrend. There's no indication of a short right now on the US yen. Let's take it down to the AUD USD. We left a trade going on Friday. Friday, we took a short at 74.50, left it going over the weekend. We've already seen a little bit more than 20 pips of profit, and I know that because my trade manager at the top left-hand corner of the chart right there, let me take a little red line and put it right here inside the green shaded area where you see that little red line pointing. It shows you current stop in pips is 0, so I've already seen over 20 pips of profit on the trade. The trade manager has taken my stop loss to break even. I can't lose. So if you were in that trade from Friday, then you should be at break even because we've seen over 20 pips of profit on the trade. You can see that we've been studying the long-term trend line here on this currency pair. That is that red trend line there. Let me zoom it out like this. You can see the red trend line. We've been studying that in the daily trade room for several weeks now. What's important about that is we zoom it back in, take a look where the market came up, touched close to that red trend line and fell back down. We came back up into the orange shaded area on Friday. Zoom it in one more time. That's where the current short opportunity is taken, into the orange shaded area. If it goes up and takes us out of the current trade, then of course we'll have to evaluate and decide if we want to get back into it. We definitely want to keep an eye on our news. But selling rallies into resistance, at least at this point, is still a possibility, I believe, unless it breaks above the green zone and the red trend line. That would probably change my mind about it. So for right now, staying under the green zone, which is our last high, under the orange zone, which is our current high, we're looking to target back down to the blue shaded area as the next support, which it was back here. And of course, if it can break through the blue shaded area, which is the hope on the trade, that will look for a return of the shorts down to the purple zone or lower, a break of that support. We would look for it to go lower. So I still think it's a good opportunity to stay in it on the short from the 74.50, 74.70 level, looking to target the blue zone and break out lower. Last high and last support. Let's just take two black X's. Last high right here, last support right here. One of those two, a break above the high or below the low, will signal our next direction for the AUD USD. Let's take it on down to the NZD USD. This currency pair did have a little bit of a fall since market open. Not too surprising if you've been following us in the live daily trade room. We've been studying this long-term blue trend line and the fact that the market broke underneath it. That became our opportunity to look to go short. Let's go ahead and zoom it in a couple of times here. Take a look. It's come up to that yellow zone a couple of times. Look at this little period of congestion. What I'm going to do is I'm going to take this black box, put it right here, and this is it right here. Right here where the black box is, between the yellow, blue, and purple shaded area. One of two things is going to happen here. It either breaks the yellow zone and goes higher. Let's see if I'll just pull this over. Breaks the yellow zone and goes higher, which, by the way, there's where the 100 period simple moving average is, or stays under the yellow zone and goes down, as it has. The other side of that is the purple shaded area, which we've been studying in the live trade room as well. The purple zone is our current support. Obviously, right now it's support. 1, 2, 3, 4, 5 days have sat down on top of the purple shaded area. What we're looking for now is either it finds support again at the purple shaded area, which we'll keep an eye on, or it breaks underneath it and continues that downward slide. Remember that 100 period moving average blue trend line. We're under it. That gives us some downside expectation. So selling the yellow zone under the purple zone, still my preferred direction. The only reason I would start buying this is a break above the yellow shaded area here for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.